Left off, the possibility of much greater tariffs has put the outlook for economic growth and Fed rate hikes much more in play. But first, let's do what Bob Pisani was talking about. Goldman Sachs just out with a report saying it's more likely than not that President Trump increases tariffs on Chinese goods. They put probabilities on it, saying the tariff increase is now its base case, 60% chance of a tariff increase for the 10 to 20, from 10 to 25%. On those additional $300 billion of Chinese goods, they only put a 25% probability. You're laughing, Melissa.
I don't know, Steve. I mean, it feels like...
You're right. Could you hold on to that thought? Because I want to come back to that.
Sorry.
I think that's a very important observation. I don't think that's I think that's important. And the 10 to 20% chance of auto tariffs. And J.P. Morgan, in a new report, says the new round of tariffs would reduce U.S. growth by 20 basis points and boost inflation. J.P. Morgan says the entire burden of the higher tariff revenue can be treated as a reduction in consumer purchasing power. We would expect the Fed to initially focus on the growth implication and look past the inflation impact. So tariffs or not can put pressure on the Fed either way. If they're dropped, it could ignite a rally and clear the way for better growth, and possibly some economists think rate hikes. If they're put in place and drag down U.S. and global growth, they could prompt rate cuts, both here and abroad. Melissa, what I think you were getting at, it's hard enough for investors to forecast growth and earnings. Now they're in the game of forecasting not even domestic political outcomes, but foreign U.S. trade political outcomes, which is another layer of uncertainty. Add on to that we are really not sure about the effect these tariffs have on economic growth, inflation, and employment. And then add on to that, we're now in the fourth layer of increased uncertainty. Add on to that, we don't know how central banks will react. So this is absolutely right. We don't know any one of those four things.
I mean, it's a very precise business to say 20% chance of this or 25% chance of that. In terms of the impact of the tariff hikes, if there are tariff hikes, is it seen as inflationary ultimately? No. And I'll tell you why. If you think of inflation as the rate of growth of prices, what tariffs do is a one-time shift in the price level. So what you'll do is you will get a single, let's create a model here where in one month they go up 20%. In that month you would add the 20%. The next month you would not have the 20% growth. Right.
A one-time shift in the price level unless it changes inflation expectations. That is among the concerns of economists, that all of a sudden people start to think, wow, prices are going up not just here, but everywhere.
Companies probably wouldn't mind passing them along.
Some of them are. Did you see what Whirlpool did?
Yeah. Well,
the story here, Whirlpool, which got protection on tariffs, raised domestic prices on washers. You know what else it raised prices on? Dryers. There was no tariff impact. They used the incidence of the tariff to raise prices on dryers as well.